Welcome to Trading Sadhguru. In this video, we'll have a look at Nifty in a microscopic view as well as macroscopic view, that is, bird's eye view, as well as what is happening in intraday. Okay, this is a one-day chart of Nifty. So here, if you see somewhere in October, a top has been formed. Until now, this top has been not taken out, and it was felt that this is the bottom in place, and we were going upward to scale new highs. But market has proved this notion wrong, and the recovery was limited to till this level, and then came the downfall. Okay, so this is how we fell. And one important thing that needs to be observed is swing low. So this is the swing low which acted as a reference for almost this period, beginning November ending to almost December ending till January. Okay, but this has been taken out now. This low has been taken out here, and whenever we are reaching this level, we are coming down. You see here, we are coming down. So, what is the way forward? So, if you look at the chart, you can identify that we are in a downtrend from here. Okay, from here. Okay, so market will never fall in one direction like continuously from here to here. So it will give up some gains, or it will gain some points while in the downtrend, and then here weak hands will be eliminated and market takes its natural path, that is in a downward trend towards downside. Okay, so this is just, I can tell you anything whether it will go up, go down. It doesn't make any sense. So let us have a look at Nifty chart through moving averages. Okay. So generally, 200 day moving average is considered to be an important one to say whether we are in an uptrend or in a downtrend. New highs, but market has proved this notion wrong, and the recovery was limited to till this level, and then came the downfall. Okay, so this is how we fell. And one important thing that needs to be observed is swing low. So this is the swing low which acted as a reference for almost this period, beginning November ending to almost December ending till January. Okay, but this has been taken out now. This low has been taken out here, and whenever we are reaching this level, we are coming down. You see here, we are coming down. So what is the way forward? So if you look at the chart, you can identify that we are in a downtrend from here. Okay, from here. Okay, so market will never fall in one direction like continuously from here to here. So it will give up some gains, or it will gain some points while in the downtrend, and then here weak hands will be eliminated and market takes its natural path, that is in a downward trend towards downside. Okay, so this is just, I can tell you anything whether it will go up, go down. It doesn't make any sense. So let us have a look at Nifty chart through moving averages. Okay. So generally, 200 day moving average is considered to be an important one to say whether we are in an uptrend or in a downtrend. Here it is 200-day moving average. Here you can see the red line, 200-day moving average. So somewhere in November end, we tried to breach this level, but a support has been found here, and again we went back on upside of the 200-day moving average. And what happened in December? Somewhere in the mid of December, we just crossed this level and stayed here for most of the time, except for these 2 days. Okay, then again we are going down. Okay, let me erase these things. So generally, breach of 200-day moving average is considered as a negative trend. That is, we are in a downward trend. Okay, and there are concepts which say that, like, they're like a landmark. We have reference points, mostly accepted, like golden crossover, moving averages, golden crossover, death crossover. So what does that mean? Golden crossover is a bull run. When we say golden crossover has happened, if a long term moving average, so 200-day moving average is considered to be long term indicator. Okay, so this is taken over by the short term from the downside. Suppose it is taken over from here, so let us say short term crossover. So we say that temporary trend is upward. So this is a golden crossover. So for it to for it to be identified as golden crossover, so which is the short term moving average that we take? Normally 50-day moving average or 100-day moving average. So different people use different methodologies. Generally taken one are, the reference point is 200-day moving average, and the short term moving average, as per your convenience and experience, you can either choose 50-day or 200-day, 100-day moving average. So let us also have 50-day moving average. Okay, let me activate here. It is under, yeah, yeah, this yellow line is a 50-day moving average. Here the crossover already has taken place. You can see here. So if you consider 50 and 200-day moving average, so the death crossover is already there. Okay, we are staying below the 200 as well as 50-day moving average. Let us also have a look at 100-day moving average. Let me uncover this. Yes, there is still time. 100-day moving average. This one is 100-day moving average. Is still above 200 as well as 50. So the crossover between 250 days trend and 200 days moving average has already happened, and we are waiting for this line to cross the red line. That is 200-day moving average. So it's a double confirmation, you can say, in a way. So if at all there is any recovery, so we will take this 200-day moving average as the reference. So what is the 200-day moving? This is a dynamic number. It changes every day based on the actual movement of the Nifty. 200 days around 23,978 as on today. It can change 23,978. Okay. And what is the 100-day moving average here? 24,450. So if at all there is an upward movement or is there any change in trend, the reference level that we are going to look is 200-day moving average, that is 23,978. And if it is breached and sustained above, then we look for the immediate target of 24,450, that is around, it's a 100-day moving average. Okay, so as of now there is a crossover on the downside and we're waiting for the other crossover, so most likely it is a downtrend. So what can we expect here? So considering that it's a downtrend, let us stay assume that it is a downtrend which is going to come. Which are the levels to look for? So 23, we have gone near below 23,000 two times, here and here. 2 days we went below, and this level is already broken as we have discussed. Okay, and this level is now acting as resistance. Okay, so we are going there and coming down. Okay, so now this 23,450 is a strong resistance. Okay, so what can we look for here? So the immediate targets, now we are at closed at 23,155. So on the downside we can look for 2300 23,000 again. breach of which breach of which the doors will be open for downside almost for 500 points, 22,500. In a span of 2 to 3 days you will see this number. If today and yesterday's low is breached and sustained for 10 to 15 minutes on Nifty. Okay, so based on the long term trend here, long term we'll consider as 1 day chart and 1 day moving average only. We are not going to weekly time frame and monthly time frame. Okay, so we will assume that it's a downtrend. So what is best in downtrend? Downtrend is whenever you see an up move, like there is a recovery of 100 to 150 points. Okay, so you take a trade on the downside, that is market is going to give up all the points or at least few 50% of the points and even going to move further down. So it is like sell and rally on the downtrend. Sell and rally. Okay, so I'm not talking about the uptrend. If it is uptrend, then it is buy and dips. Okay, they're self-explanatory, nothing much to explain. So the strategy would be here: whenever you see a recovery, whenever you see a gap up of significantly, say at least 100 points or 150 points, better to go on the downside and don't go all out in one go. Like don't put all your capital in one trade. So there are risk management methods wherein you can minimize your risk even if your view goes wrong. So it is always advisable to use stop loss orders to minimize the losses. Before you enter a trade, make sure when you want to exit, okay, whether you meet the target or even if your view goes wrong, how much loss you are willing to take. Define that and then enter the trade. Then you can protect most of your capital even if your view goes wrong. Okay, so let us also look at what happened in the previous periods whenever 50-day moving average crossed the 200-day moving average from the upside towards downside. Okay, let me erase all these things before we have a look at the complete chart. We'll only go till pandemic lows. So there is no end. If you go on checking each and every year, it will take a lot of time. It serves no purpose. We will only just see what has happened in the last 2 to 3 years whenever 50-day moving average crossed over 100-day moving average. Okay. Yeah. Here 50-day crossed. So when was the last time 50-day or 100-day cross 200-day moving average? So 200, see, 200 day is very important because it has not crossed over here. You can find 100-day moving average crossing over 200-day moving average. So when was this? This was somewhere in June 2023, almost a year, 1.5 year back. Okay. So what about 500-day, 50-day, 29th May or June? So the important thing is 50 days is short term trend, so it will first cross over the 200-day. Then comes the turn of 100-day moving average. Here it is a recovery, and this downtrend lasted for very short duration, a month, not even a month, and market again recovered and went back to its normal direction, that is upward direction. And you can see here, so the downtrend started here. 50 period moving average crossed over the 100 200-day moving average, and it was a very big fall that has happened in around April 2022, and it lasted till July 2022. April, May, June, almost 4 months period you can see here. Okay. And for it to come to positive territory, it is only in September, almost 5 months, 5 to 6 months. So it was under below the 200-day moving average. When 100-day moving average crossed over 6th May, and when it went back 3rd November, almost 5 to 6 months. So this was a significant down move during that period. And before that, let us go where we happen to see this moving average. Oh, ho, ho. This is COVID pandemic, and 200-day moving average. We went much below 200-day moving average, and it took almost, this is March, April, to come to 200-day moving average. It is only in July. It took 3 months to come back to 200-day moving average. So here it is around 10,900 or 10,900. Here the low is 7,600, almost 3,400 to 500 points in 3 months. So this was a complete panic. Nobody knew what is going to happen. So out of panic, it went below 200-day moving average. It took some 4 5 months for it to come back to 200-day moving average. So this is an exception. It's a once in a 100 years event, pandemic, as per the previous data. Okay, so let us not go beyond this and not confuse ourselves. So now you understood that the frequency of happening the short-term 50 or 100-day moving average crossing the 200-day moving average from top towards bottom. It's happens very not so frequently, not every day on a daily time frame, not every month it happens. Certain period where the market forces feel that the correction is required, so market tries to go below 200-day moving average. But finally, if you look at long term perspective, the natural direction of the market is upside only. We have seen even now that in pandemic, what has happened, it has gone much below, some 4,000 points below moving average, almost 40% below where it was. But in 3 to 5 months time, it came back to 200-day moving average. So if you are a long term investor, any downfall is an opportunity to get into the market. If you are a trader, it is always be in the right direction. That is because this crossover is happening and market is trading below 200-day moving average. It is always better to take a bet on the downside whenever you find a recovery or a gap up. That's all for today. Take care. Bye bye.